page, you'll see they've given you more information here, obviously, about practice. So if we're running a law practice, we are going to have to account for the resources in the actual business's possession. Okay, so yes, you're receiving cash from your customers or clients, but that cash doesn't belong to you unless you've earned it. Right? And the only time where you'll earn the cash is if you've rendered a service, i.e. you've done something, okay, registering something, giving advice, whatever the case might be. Okay, so the nice thing about this particular study guide compared to the one last year was they've tended to focus more on the law type of, let's say, the law-specific transactions rather than just more general. In the past, it was more general, so you kind of did more like general accounting that kind of then just filtered through to the law type of stuff. Okay, so they've changed it for the better, I think, in terms of making it more practical for you guys. Obviously, studying your specific degrees, they've given a lot more detail and a lot more information and a lot more exercises covering something like this: trust money, T accounts, journals, and all of that. So I'm going to refer to some of the examples in your notes just to elaborate on how to actually account for it. The basics we've already looked at. Something that I do want to discuss is just the separation between us and the business. So that's the one. Okay, it's just one page. It's not much. It's just looking at this whole trust relationship between you and the business. Right, so what are we dealing with here? Financial accounting. What is the purpose of accounting? It's to create information for us to use in order to make a decision. Okay, so information is very important and very powerful for decision making, because if you've got more information, you can make better decisions. If you don't have information, those decisions aren't going to be very good. Right, so these are one of the last few notes that you have in your packs. Some of it you won't actually need. For example, previously they used to test this: analysis, interpretation of financial statements. Now I don't see any of this in your particular module. So ratio analysis isn't something that they've included in the study units or the course this time around, but they've obviously improved certain areas. So this is an improvement. Before it was literally, I think it was 5 pages or so. It wasn't much, and it wasn't much of a focus in the exams either. It might change. Okay, so I'm glad that you guys mentioned that 2018 first semester paper is available, because then that gives you a better idea of what you could expect this year, rather than looking at 2017 or 16 or 15 or 14. Okay, yes, that stuff is still relevant because you'll still see bank recon, you'll still see T account, you'll still see accounting equation, but obviously it might be worth less now in terms of mark allocation, because they might be giving you more questions relating to things like this. Okay, so what relationship exists between these two parties? Yes, okay, so the client and the law practice has a relationship based on trust. Okay, and hence trust accounting. Okay, so when looking at trust accounting, whose books are we looking at? Ours or the client's? The client's. So this belongs to the client, but we need to account for it. Why? Well, the client trusts us to obviously do things correctly. Okay, so if the client gives us money, we need to therefore show the customer or the client, well, this is your money in your account, i.e. the trust account, and then this is the law practices money, okay? And we're not going to be combining the two, they're completely separate. Okay, because yes, we're representing you, but they're still separate businesses or separate legal entities. Right, so the law practice will operate and the client will obviously, inverted commas, operate. Okay, they'll run their own operations. Okay, so they'll do whatever they need to, and they'll pay for their own services, and they'll fund their own expenses and so on. Right, obviously the client is the one that's responsible for paying you as the law practice. Right, the trust accounting is just accounting for those resources. So if the client gives you money, let's say they give 100. Okay, that doesn't belong to the business. It belongs to the client. It'll always belong to the client unless you've earned it. Okay, or you've needed to use it in order to do certain things for the client. Okay, it's like an agency relationship. Okay, they're kind of like your agents. If you employ the services of a lawyer, they're your agent. They're acting on your behalf. Okay, they're there to help you as much as possible in certain areas. Okay, and that's what it's based on. That's the relationship. Okay, we kind of looked at this last week. I'm just showing you a few things here relating to the accounting. Right, so we've got two very, very, very separate considerations. The one is being the law practice and the other being the client. Okay, will you see both? Yes. Why? Because the business needs to account for both. You can't just account for the one, not the other. Okay, so that's why when you look at a question, you'll always see like two bank accounts. The one will hopefully have the word trust there because that's for the client, and the other one will either just be cash payments journal, or they could differentiate it and they could say the business cash payments journal. It just depends on the level of detail. Okay, but you need to remember that it's the law practice that's accounting for everything, but it's from the client's perspective. Okay, so the law practice and the client have a relationship. What would the client be to the law practice? A debtor, right? Most of the time, because they would be owing them for work that is completed, okay, done. So again, it depends. The client might pay you upfront, okay, they might pay you in advance, maybe, and then you just obviously bill them accordingly, or you might bill them and then collect payment later, depending on what the situation is. Right, so when looking at the law practice, if you receive cash, it needs to be kept separate. Okay, that's where the whole trust thing comes into it. Income and expenses. Will the law practice still have those line items? Of course they will. Okay, law practice will have its own income, and there might be income from other sources. Maybe there's some advertising, or there's some fees that are being collected elsewhere, or maybe some rent that's being collected from a spare office that they're renting out to a separate client or tenant. And then the expense will be the normal operating costs. Right, so everything there is normal. Okay, normal being like what we've been looking at up until now. Okay, so normal sole proprietor, capturing expenses, debit, credit, increase, decrease, CRJ, CPJ. The only thing that you do need to keep in mind is, well, whose transaction is it? If it's yours, then you need to look at it as your record and your transaction, and then you would record it normally. If it's a client's, then you need to account for it from the client's perspective, but you're the one accounting for it. Okay, so it gets a little bit complicated, but we'll look at it when we look at some more examples. Right, then just a note here, trust cash journals, safekeeping, separate accounting, law practice keeps track of client money. That's what they're doing. Okay, and that's kind of what you need in order to look at these examples here. So the rest of chapter 4 is mainly that. Yes, there are one or two normal journals, but they change focus quite a bit, and they focus more so on the law practice. Okay, so things that we would have to do. Okay, trust money. I think we've covered most of these, but I'll just recap the key points. Okay, so what must the trust money provide for? Services. Okay, third party transactions. Right, so the client needs you to help them, but you require the services of someone else in order to complete the legal work that you need to do. Okay, that could be a third party. So services, third party. Refunded to a nominated person. Okay, so refunds are paying somebody from the actual trust money. Okay, so the client has to pay someone. Transfer of money from the business bank account to the trust bank account. Okay, that's obviously looking at the relationship between the law practice and the client. Okay, that's something that we've seen already. Okay, then you've got trust payments. Right, so this is a trust payment. If it's a trust payment, it's a client payment. C. Trust money, client's money. Trust payment, client's payments are made by check or EFT. Expenses are paid for specific purposes. Okay, advocates. Paid to third parties. Instructing attorney for correspondent transactions. Transfer of money from the trust bank account to the business. Okay, again, it's from the client's perspective, things that the client will have to pay. Okay, so the first bit is just look at the money that's allocated to the business, that's the clients. Okay, so those monies that are being collected will either be from deposits, third parties, refunded, or transferred. Okay, but it's the trust money, it's the client's money. Okay, so services. Right, what could take place? Well, the client needs your service, and that would then create a, well, I don't use the word obligation, I'd rather entitlement. Okay, so the business would be entitled to a fee from the client. Okay, so the trust money, right, could be a deposit for the services, okay, or a deposit for paying third parties. Okay, that's where the payment comes into it. Okay, or money being refunded to a nominated person. Okay, so all of that's just look at the money that they have, and let's look at the payment. Okay, the use. Right, it's quite similar because the trust money is used to pay people, businesses. Okay, that we've seen already. Trust cash receipts journal. That's what it looks like. Sundries. So before, sundry was a separate part of the actual journal in terms of columns, and then you could put additional detail there. Okay, right now as it stands, they've just given you one column, and you can put anything you want to here, okay, in terms of amounts, and the details would be what you would have there. Okay, so it's a bit simpler, okay, because you don't have as many columns. They've only given you 3. Okay, what type of element would the trust creditors account represent? Inverted commas, liability. Okay, the bank is the bank, which is a debit, which is the assets. Okay, obviously the liability is what's being owed to the credits. Okay, so when looking at the trust creditors, what are we focusing on here? Trust, cash, receipts, journal. Right, so if it's the trust cash receipts, it's the client's account and it's the client's receipts. So anything that takes place here is the client's, basically. Okay, so it's not yours, it's the client's. So you account for it in your books. So in your books, you will have that account, okay, that T account. There'll be a T account in your books that's called trust creditors, right? And you'd be crediting that account every time there's money being received from someone for the clients. Okay. Trust cash payments. They've given you a few examples there. Here's the key, the template. Again, that's there. Why is that there? Because will you owe the client more if the client is paying? No, you wouldn't owe the client more, because the trust creditors is your obligation to pay them back what is theirs. Okay, it's what is theirs, not what is ours. Okay, the bank, this would actually be the trust bank account. Right, so when I say bank, because this is a trust CPJ, that would have been the trust bank account. Okay, you get trust bank account and you get bank accounts. Okay, business account, client account. So this is looking at the trust bank account, which is still a debit, it's still an asset, all of that applies. The trust creditors is still liability, it's still a credit. Okay, but am I paying or receiving here? I'm paying. So when making a payment, are you going to be increasing or decreasing the liability? You'll be decreasing the liability. So these would all be debits, okay, against the credit that's in your books, okay, that's in your record. Okay, that's why I wanted to show you the CRJ first, okay, because what did we see in the CRJ? Client money going into their account, there's it. Credit the liability, okay, that we know, basics. Okay, why is it a liability? It's because the business is entitled, or not titled, obligated to pay that money back to the client if they're not going to be using it. Okay, so this belongs to the client. Okay, but will this go up or down? It'll go down if the client is having to pay something or someone. Okay, that's why you've got a trust cash payments journal. But again, 3 columns here. There is a 4th, but this is only for a transfer. Okay, a transfer to the business. Right, when would you have a transfer to the business? Well, yeah. So if the client is legally required because of whatever transaction to pay, inverted commas, the law practice, then there would be a transfer to the business. Okay, something that they would have to pay to the business. Right. So let's just see what examples they give you here. Bank charges, interest received on the trust bank account. Okay, what would a bank charge do to the client's money? Decrease it. Okay, so the client has to pay for those fees, because if you're keeping money for the client, okay, you're actually doing them a favor. Right, obviously you're the one that has to open up that bank account, okay, and keep that bank account and maintain the bank account. Right, so if you're being charged fees to maintain that account, right, the only reason why you have that account is because of your clients. Okay, so it's your client's, inverted commas, charge. Okay, but it's your bank account, but it's your bank account kept on behalf of the client. Okay, see, that's why it gets a bit complicated. Okay, because it's like 3 parties: the bank, the business, and the client. Okay, the client doesn't go to the bank to open up the account. Okay, the law practice does that. The law practice has the trust accounts. Okay. Right, then you've got interest received. If interest is earned on the money that the client has given you, can you keep that interest for the business? Of course you can't. Okay, why? Because if it wasn't for the client's deposits, there wouldn't have been any interest income. Okay, so if there's any benefits, i.e., if the client gives you money and you look after it, and you put it into the trust bank account, and the trust bank account earns interest, you don't get to keep it. The client gets to keep it. Okay, because it's rightfully theirs. Okay, it's not yours unless you've earned that income. Right, that's what they've described here. They've said bank charges in respect of the trust bank account can be dealt in 3 ways. Okay, there is room for creativity in a way, because you have 3 options. Okay, you're limited to 3, but at least you have a choice. Okay, it's not like you have to do it this way. Right, the first is debiting the trust bank statement with the bank charges in respect of the bank account. The second is debiting the business bank account with the bank charges in respect of the trust bank account. Okay? And the third is a separate bank account can be opened. Interest earned on the trust bank account is then deposited into this account. All bank charges will be paid from this account. Okay, so see, 3 different ways to treat it. Okay, the bank charges. Right, it just depends on how they worded in the question. What I would suggest you guys do is look at the example exercises. That's the best. Okay, because then you'll know how UNISA wants you to account for it. Okay, because there are different ways. I mean, they've actually stated here 3 different ways, right, to treat the bank charges, okay, to deal with the bank charges. So stick to the one that they've given you in the examples. Right, you can read the rest here. This is additional information relating to the charges. Let's look at another journal. Okay, maybe this is important. In this module, we shall always assume that bank charges in respect of the trust bank account are debited to the business's bank statement. Okay, so that's what they've assumed. Right, then we've got other journals. You guys have seen a general journal in the notes. I spoke about it. A general journal is for anything that doesn't have a specific journal. Right, so if I have a cash receipts journal, I can put cash receipts there. If I have a cash payments journal, I can put cash payments there. If I have a petty cash journal, petty cash goes there. Okay, there can be a fees journal, there can be a debtors journal, a creditors journal, there can be lots and lots of different types of journals. The general journal is just for other things that we cannot record in a specific journal, and normally also adjustments. Okay, because adjustments would be things that you would have to do in your books in order to make things correct, accurate. Right, so here's one example. Assume that AL deposits 300 towards the cost of handling his divorce, and a receipt is issued. The account of W is, however, erroneously credited with 300. The error will be corrected in this particular journal. Right, so is that a trust transaction? No. Is that a business transaction? Yes, because the business is adjusting a error, a mistake. Okay, so the general journal is used to fix things or to process other, things that don't have journals. Right, so obviously, what did you do? Did you debit or credit Lusufi, W? You credited Lusufi, right? Okay, so was that correct? No, that's incorrect. So should that have taken place? No. So how do you reverse out a credit? By processing a debit. And therefore, you debit W, and then you credit A. Right, so just applying the rules. Hey, debit, credit, plus, minus, increase, decrease. Obviously, if you wanted to, you could put what here? Liability, decrease, liability, increase. Okay, because we're dealing with clients here. So if I interpret this in a different way, a client gives you money, but you credit the wrong client's account. That's what you did. Okay, do you owe W anything? No. So I need to reduce the liability. Okay, do I owe something to A? Yes, and therefore I have to show the liability increase, because right now I haven't shown anything for A. Okay, so do you see how easy that is if you just apply the basics? Right, it comes back down to those 6 rules. Okay, you just need to understand, what are you dealing with? What am I dealing with here? A client. Okay, what represents the client's account? The trust creditor account. Okay, which is, inverted commas, a liability. Right, so additional workings that I could add here is just that. The one liability goes down, the one liability goes up, and that's it. Okay, you're just treating it like any other account. Okay, here's a longer example where you've got a trial balance. Okay, what is the purpose of a trial balance? We've seen it in the notes. It's to check the debits and credits are equal, that's all. Okay, because financial statements are prepared based on accurate accounting records. So when looking at a trial balance, they don't have to give you this, a debit and a credit column. Right, you should be able to identify what these things are. Okay, so remember you had that table in the first 3 sets of notes, the units in your additional notes. You can now add to that table. Equipment, you've probably already got, you probably have that in your table. Equipment is what? An asset. Okay, because I know it's an asset, that's why it's a debit. Okay, they don't have to give you debit and credit. This is an easy question because they've given you the debits and credits. So you kind of know what it is because by process of elimination. Right, but they can just give you one column with amounts and one column with accounts. Okay, your job is to know what you're dealing with. Okay, law library. Correct. Okay, that's why it's a debit. Okay, because assets have debit balances. Business bank account, assets. Okay, capital's capital. Note, I didn't look at that one. Okay, capital's capital. It identifies itself. Trust bank account, also an asset, but belonging to the client. Okay, there'll always be 2. Trust creditors control, that's a new one. Well, relatively, we've been speaking a little bit about them last week and now more this week. Liability. Okay, because the client gives you money, it's still the client's money. That's why it meets the definition of a liability. Okay, obligation. Okay, you as the business are obligated to either return the money that was deposited or earn the money by rendering a service. Client's control. Right, you know it's a debit, but you know why. Correct. It's like a debtor, so it would be an asset. Okay, so the client control account is keeping control of how much the clients actually owe you. Okay, and that could be because of fees, maybe. Okay, billing your client for your time. Okay. The sheriff. Why is the sheriff a credit? Yes, you're obligated to pay him. So this should actually have been sheriff payable or sheriff fees payable. Okay. They should have elaborated a bit more there. Okay, but I guess they're assuming, well, you guys are in the law like industry. When you see the word sheriff, you would know that that would be how can I put it, a resource that you can use to help you render your service. Okay, so this would have been a liability only because it's payable. Okay, a fee that's payable. And then stationery on hand. Be careful. Stationery is an expense. Okay, because you use it. You use it up. But if it's stationery on hand, yes, it's an asset because it hasn't been used. Okay, those are adjustments. Alright, so I need to cover those adjustments with you. Let me see, where did I put it, which set of notes? Okay, I'll find it later. I thought these two had it. It's not open here. Okay. Right, but if we need more information, I'll share it with you later on. Let's just carry on. But this would be a resource that's controlled. Okay, not an outflow of benefits. Okay, that's the only reason why you're treating it as an asset, not an expense. Okay, so just be careful with that. So stationery on hand, asset. Packing material on hand, consumables on hand, anything on hand will be seen as a resource that hasn't been fully utilized. Okay, so it's something that you haven't finished using. Okay. Right, then they've given you transactions. With these, let's identify who does it affect. That's the most important bit. And you can always highlight something in the question. Right, so number 1 says, paid the net amount collected from Jason to the instructing attorneys, Bowers and Scott. Okay, if you're paying collected from Jason, okay, and it's being paid to instructing attorneys. Right, so is this a business expense or is this a client expense? Exactly. Okay, so that's the key. Okay, the first thing that you need to do is just separate it. Yours or theirs. That's the first step. Okay, and then you can look at receipt and payment. Obviously, this is a payment, so trust, cash, payments, journal. Paid water and electricity account of JAP. Yes, okay, remember, I didn't refer to the name of the business. I should have. Okay, the name of the business, Julius, Anthony and Partners. Okay, there's it there. Right, so that's the business. Right, so that's an easy one to identify. Business, CPJ. Okay, so the hardest part is going to be doing that. Okay, the easy bit is actually recording it. Okay, that you shouldn't struggle with because, you're going to have to study the templates. Okay, so you'll have to know what columns to draw up. Okay, that they probably won't give you because it's folio paper. Did they give it last year? Okay, then you're lucky. Okay, so yeah, but they've never ever given any student in any module, not only this one, in all templates. Okay, it's always just been, here's folio paper, you can have as much as you want, okay, but you answer it yourself. Okay, you draw everything up. Okay, but now if they've done that, then it's an improvement in terms of making it easier for you. Okay, well, that's great. That's good for you guys. So it's a good thing. It's not a bad thing. It'll help. Okay, so that's even easier then. So you don't even have to study the templates if they're going to give you the templates. Okay, but then you just need to understand it. Okay, so then literally just go to your books and interpret the information, and then just make sure you can use it. Okay. Number 4, received that amount from B in respect of the registration of a bond. It is expected that registration will only take place in August. Obviously, we look at the month of July. Okay, so it is trust. Why? It's the client's money. Have you earned this? No, you will only earn this in August when you register the bond. Okay, then it will become your money because now you've done what you were supposed to. Okay, so as it stands, just take it for what it is. Okay, right now in July, it's money that belongs to the client. Trust CRJ. 6, paid advocate R with a trust check. See, that's a giveaway. Okay, trust check. Bracket, advocate R is to act as defense counsel for H in a forthcoming case. Right, so why are you paying R? Because R is going to represent H. H is your client. Okay, you don't pay for this charge because it's not you that's being represented in court, it's the client. Okay, the client must pay this, so it must come out of their bank account, not yours. Trust CPJ. Okay, so it's actually quite logical if you think about it simply. Okay, try not overthink it. If you do, then it might complicate it more than it is. Okay. Okay, number 9, debited fees of that amount in respect of P. Cox's divorce case to his account. Okay, so Peacock is who? Your client. Okay, you're debiting his account. Why would you do that? Because you earned a fee, right? Who is going to be, okay, well, they didn't give too much detail here. Who's going to be helping you with the divorce? The law practice. Okay, so you definitely did something for P here, and therefore you're debiting his account. Right, the only reason why you would debit his account is if he is now owing you. Does that make sense? Okay, because now he is your debtor, inverted commas, because of the fees that you're charging his account. Okay, that would be very strange. Okay, well, actually, we could debit the trust creditor's account, because what does that do? It decreases the liability, meaning they're owing us, well, yeah, we're owing them less. Okay. Exactly. Okay, so yeah, you just need to look out for what they're asking you for, because there's 2 ways of approaching this. Let me quickly show you what I mean. Okay, so when you have a law practice earning fee income, okay, it's just additional to what we're discussing here. Okay, so do you agree when the customer or the client, when the client gives the law practice money, you would have debited the trust bank account, okay, you would have credited the trust creditor. Okay, liability increase. Okay, bank is obviously an asset, let's put that there as well, why not? Okay, so this belongs to the trust, okay, it belongs to the client. Right, if the client is required to pay you a fee, what you could do is you could debit what? The business's bank account, okay, and credit the, debit the trust, sorry, yeah, because it's fee income. The trust creditor liability decrease and credit the fees. Fee earned. Brackets. Fees is income, increase. Okay, that you could do. Or you could have done it, how they've done it, is they've debited the client control and credited the fee earned. Okay, so why do they do it this way? Well, remember, there's a level of trust here. Okay, so the company is actually trying to show this as a separate transaction altogether in its own journal relating to fees. But it just so happens to affect that, okay, the client's records. Okay, so if I'm looking at this would have been the business's records. Okay, that would have been the business's records. It's got nothing to do with the client at all. Okay, the problem with using this, there's nothing wrong with using it because the net effect is the same. Okay, but the problem with using this is that this debit is for a client account and this is for a business account. Okay, that's the only reason why it becomes a little bit problematic, because you're debiting the client's account and then you're crediting the business account. Okay, you're not showing it separate. Here, I've shown the business recording a debit against the client control account and then the credit for the fees earned. Okay, and then what am I going to do? I'm going to show in the client's records, okay, a debit, so this, and then a credit for the client control. Alright, so notice I've debited and credited the client control. Alright, so it actually eliminates itself out and then you land up with this. Okay, because have a look, there's the credit fees earned, there's the debit trust control. Trust creditors, sorry, not control. Okay, trust creditors. Right, so there's the credit, there's the credits. There's the debit, there's the debits. Well, yes. Because the payment would have come from the client's money. Yeah, but remember, the client doesn't have to pay it in inverted commas because you already have the money. It's just sitting in the trust bank account. Okay, so the client's not going to come to you and give you more money. Okay, you're just going to take it from the trust bank account and put it in your bank account. That's all. Okay, it actually, the client really doesn't care about what happened, because the thing is, you care about that transaction because you need to show it, because you need to prove to your client that you're doing things accurately without taking things without the client's permission or without the client knowing. Okay, that's the only reason why you're doing this. It's to add another level of trust. Okay, because let's assume that you have a very good relationship with a lawyer and you trust them so much. Right, you don't really even need them, okay, to show you all of these accounts. All you want them to do is represent me and win the case. Okay, I'll give you whatever you want, you get the job done. Okay, however you run it, however you do it, like, it's up to you basically. Okay, that's when the trust is like huge. Okay, high level of trust. Okay, but now if you're going to some random attorney and you don't even know them, but now you require their services, right? Obviously, the only way you're going to gain their trust is if they can prove and show you all the records. Okay, say, this is your money, this is our money. Okay, when we need to do something with your money, we'll use the trust bank account. Okay, all of that. But ultimately, if someone wants a lawyer to help them, they just want the result ultimately. Okay, the only reason why we've got all of this is to protect the law firm, okay, because obviously you need to meet legislation, okay, so you also don't want to get your law practice into trouble, okay, and the same thing is, well, the other thing would be to develop more trust with your clients, okay. All right, let's go back to the textbook. Okay, so that one, do you guys agree, is whose record? The business's. Business C, well, CRJ if you've received the fees. Here, because we're debiting the control account, it'll be a fees journal. Okay, only because it hasn't been paid or received. Okay, but again, it's kind of like you just take money from one account to put in the other account. Okay, because the business controls both. 10. A check for that amount received from S in June in respect of the registration of bond was returned by the bank marked RD. Okay, we looked at RD checks and we did a bank recon. Okay, dishonored check. Okay, that's the first step. This is a dishonored check. Okay, we know from our bank recon that a dishonored check always affects which journal? CPJ. Because a dishonored check means previously you got the check, you deposit it into your bank account, it bounces, you never actually got the money. Okay, that's kind of what happened in a nutshell. So what are we going to do here? We're still going to use the CPJ, but what was this check for? Okay, it was the trust CRJ that initially would have been affected, do you agree? Because this money originally came from a client. Okay, so when you had first recorded it, it would have been trust CRJ. So now if you reverse it out, it must be trust CPJ. Okay, just the opposites. Right, and that's why it's easier to understand it when you've looked at the bank recon. Okay, because now we've covered that. CPJ. Okay, the last four. You guys try. Write down what journal you think this is going to go to. We've done quite a few now. Should get a bit easier. Looks like you guys have done it, so let's check. Okay, Lamise, what's this one? 13. Okay, so let's have a look. Received this amount from S, a client, who requested A to act as his defense counsel. Okay, so you are receiving money from a client, okay, because you are going to be required to represent them. Right, so this money is the client's because you are going to be defending them. Right, so C, trust CRJ is correct. Okay, trust CRJ. Okay, Francis, this one? Okay, so paid the sheriff for the delivery of a summons to N. Okay, does the sheriff help you or the client? Helps you or the client? Helps you, helps the business. Okay, so without the sheriff, you wouldn't be able to do certain things. Okay, so that's like paying for water and lights because you can't run the business without it. Okay, so this I would also put where you put it, business CPJ. Okay, charges interest of 10 on the arrears account of M. Corsi? Business CPJ. Is that what you said? Okay, let's think about this one. What's happening here? You're charging interest to whose account? M. Okay, so what is M to the business? A client. Okay, it's probably a debtor. Why? Because it's outstanding. Okay, it's an arrear account. Charges interest of 10 Rand on the arrear account of. Okay, Modise, so what am I going to do with this? Well, if this is interest that's being charged, interest that's being charged is good or bad? It's good for the business. Why? Because you're earning it. Okay, it's an additional benefit. Right, so how do you increase income? You credit it. So I would have credited the interest. Okay, then I'm left with the debit. Right, so that's why I'm saying that this is probably a debtor or a client. Right, so debit the client's accounts. Okay, that could go to a general journal. Why? It's an unusual transaction. It's not something it's not a fee. Okay, that's not a fee. Can't go to a fees journal. Okay, you're not receiving anything. Can't go to a receipts journal. Okay, you're not paying anything. Can't go to a payments journal. Okay, so if there is no journal for it, then take it to the general journal. Right, all of these transactions can actually go to a general journal, but then it'll just be debit this, credit that, debit this, credit that, debit this, credit that. Okay, but then you'll have a debit credit for every single transaction. Okay, the only reason why we do it in journals is because what we said earlier makes life easier because we're grouping things together. And then the last one, Stacy, paid. Yes, okay, so you're paying for this stationery. Right, that's a normal operating expense. Right, and that's the hardest part. Is there more? Okay, alright, let's discuss these two then. 28, paid the office rent. Business CPJ. Easy, hey? It's the normal expense. Well, normal inverted commas. Okay? Paid the telephone account. Same thing. Normal. 31, issued a debit note to Nkosi in respect of fees for drawing up his will. There's the key. Fees. Okay, you're debiting his account, meaning it hasn't been received. Okay, so fees journal. Okay. Right, and the instructions were obviously to drop all the journals, right? And that you guys can look at in terms of the posting. It's actually quite simple because if they're giving you if they're giving you columns, right? All you literally need to do is just post it and write in the amounts. Okay, there's no calculations, there's nothing. Okay, everything that you had to do was what you just did. Okay, identify where to put what. All right, so let's go here quickly and just look at the, okay, so what was the first journal? Trust CPJ. Okay, so let's check our answers. Trust CPJ. Transaction 6, is 6 there? Oh, 1, I overlooked it. Okay, 1, yeah, T, trust CPJ. Trust CPJ, trust CPJ. So 1, 6, 10, that's it. Okay, that's what we had. Is that what they had? Let's have a look. Oh, yeah, well, yeah, this is the balancing at the end. Okay, because, okay, let's discuss that because when looking at this, the trust CPJ, okay, we've got 1, 6, and 10 there. That was fine. Okay, did we have 4 and 13 there? Just go back and check for us. 4 CRJ, 13, yes. Okay, that looks right. Okay, so that was fine. Okay, so why do you have this at the bottom? Well, let's discuss it. Is the client going to be your client forever? Well, you're saying hopefully. Okay, hopefully not maybe. So, okay, it all depends. Right. Obviously, if the client asks you to do something, once you've done it, are they still your client? No. Okay, because you've done what you're required to do. Okay, so the contract ends or the agreement ends once you've done what you're supposed to do. Right, so what do we have to do here at the end? Well, here at the end, what they've done here is that if you look at this, credit, trust, creditors, control accounts. Right, what is the trust, creditors, control account representing in terms of elements? A liability, do you agree? Okay, and what is the trust bank account representing in terms of an asset? Correct. Okay, so what is happening here at the end? It's the totals, that's all. Okay, so those are the amounts that are being transferred to those respective journals. Okay, but the reason why they do that is to show that as a general ledger line item. Okay, because it's still going to be a T account that's open in your books. Okay, so normally when you have these journals, you normally close them off and then you post the totals through to the T account. The T accounts all balance off nicely. Okay, the thing is when you have a client and a business, you can't balance off those accounts because you need to have those accounts open. The only time you'll close off the accounts completely is when the client no longer is your client. Okay, when you've concluded the service. Okay, once you've done what you're supposed to do. Okay, so all of those are just totals. They're just showing where the totals are going to be referenced in the general ledger, which is the T account. Okay, the T account. Same thing with that, the trust CPJ. Where do you see TCL? Oh, TCL, that would have been trust creditors ledger. Okay, because what is that going to affect? It's going to affect the T account for Bowers and Scott. Okay, or for H and F, or for S and S. Okay, or for B and O and SS, sweet pea. Okay. Right, yeah. So the TL, it's just referencing. I've never ever seen UNISA give any marks for, or any institution actually, for folios. Okay, because folios are folios. Folios, you actually don't have to do that because nowadays everything is done electronically. Right, so the computer will give you the folio. The computer will give you the reference. Okay, back in the day when this was done on paper, then you had to write this in because then you had to know where to put that, or you had to know where that was referencing. Okay, so it was just a way to make life a bit easier in the past when things weren't digital. Okay, nowadays the folios are it's almost irrelevant. Okay, because the computer will do all of that, the referencing. Okay, that's automatic. The computer will debit and credit and post everything in correctly. I don't think you have to. If you want to be safe, just put it in. Not make something up. Just put the TCL there. Okay, obviously TCL 4 or 5 or 6 or 7 would depend on which client it is. Yeah, the numbering would be for the client in terms of their, so client 1, client 2, client 3, because every single client must have their own T account. Okay, you can't have one client, you can't have all the clients in one account, if that makes sense. Okay, because then that's a complete mess. Because now how are you going to close that account? How much do you know how much money they've given you? How much do you know how much you've earned from them? All of that. Okay, so just keep it separate. It's the same with a normal debt and a creditor. Okay, a normal debt and a creditor has to be kept separate. Okay, because they're different customers. A debtor's a debtor, a creditor's a creditor. You won't only have one debtor, you'll have many. You only have one creditor, you'll have many. Same thing applies. That's just referencing. Okay, so I doubt the folios are going to carry any marks. Okay, maybe if they have like a format mark, perhaps. Okay, but that kind of doesn't make any sense now because they give you the format. Okay, in the past, they could have maybe given you a 1 or a 2, depending on the marking rubric, for having studied and having drawn the formats. Okay, that would have been fair because it would have taken you 5 minutes or 10 minutes to draw everything up. Okay, then that's possible. Again, it depends on the marking. It's difficult to say for sure how important the photos are, but generally they're not important. Okay. All right, and then the rest, you guys can look at this. We've already done it. These are all the journals with those columns. Okay, you can see how easy this is once you've done the hard bits. Okay, maybe let's just check them. If you can go back, just check. 2, did we say business CPJ? 14, 21, and 28? Good, okay, so that was all fine. Fees journal, we should have had 2, 9, and 31, did we? Okay, good. And then, here's the general journal. Okay, see, they even showed it as a general journal. That's good. Okay, they even brought in the general journal to show it to you as well. Okay, we spoke about this, so we had that. Okay, great. And that's that. That's the trust CPJ CRJ.